Good morning. I I can't let go of how happy I become when I hear the simpler intro jingle at the end of before we start here. It's such a happy and nice little tune to begin these live streams with. But nonetheless, Nico, Jake, how are you guys?
Yeah, I'm fine, thank you, Pierre. How are you, Nico?
I'm good as well. Yeah, thrilled. 1 week off. Joining the dynamic duo and the German. So it's a trio now once again, and looking forward to this week. It's awesome.
Absolutely. The three musketeers are back here to report on the latest and greatest of the iGaming industry, of course. And Jake, we were saying here before the German-built desk is still holding up. It's still looking good there in your new house.
Yep, still standing strong. I thanked Nico off stream before we came on air.
Brilliant. Guys, like always, really interesting week ahead of us here. And the sentiment has very much been here in the last couple of months that, lots of negativity on the stock markets, the share prices are falling. And this week is not an exception to that, as we have now officially entered bear territory, as we can read in all the headlines of the financial newspapers. So we're going to kind of dig into what this means, first of all, this term. And I think Nico has a little surprise in store for us, actually, why it's called bear and bull. What's the actual meaning between these animals? So we leave that as a cliffhanger for now, right? to hook people here in the stream. So, you can't really leave before you get the answer to that from the German himself here. But this is something we're going to talk about. And what does this mean for the iGaming industry? Because we talked about this here just before we began the stream today, that the fact that investments are flowing out from the financial markets can have potentially some severe repercussions on our industry as well. So we're going to talk about that. And another story that emerged this week is that FanDuel is dominating the American market on the online sports betting side of things, to the point where they were able to generate more gross gaming revenue in April than all other online sports betting companies together. It's a pretty crazy statistic. And then we're going to move on as well to the fact that Malta, where I'm sitting right now, as you can see, we went from being grey listed to the sun is shining and everything is back in normal again. Malta has been whitelisted by the FATF, meaning that we are off the economic watchdog's naughty list. Essentially, we are now on the nice list again, which is good, as we still have a half year to go to Christmas. So we hope that Malta will be richly rewarded here as we go forward through the year. And on top of that, we have a couple of other.
Sorry to interrupt.
Yes.
And as a little cliffhanger, by the end of this podcast, the coloring of Pierre's T-shirt will go from gray to white.
It's actually, believe it or not, Nico, but it's actually blue. So okay. I don't know. I think you need to check your eyes a bit there, Nico. But anyway. Fair enough.
That will definitely keep people tuned in.
Yes, that's absolutely true. And Nico here has kind of captured a bit of a scoop, being German and all. The fact that Unibet is leaving the German sports betting market with headwinds there. We're going to talk about that. This has not been reported in the industry yet. So a scoop here from Nico that he found the other day. And we have a variety of other posts and stories as well, if we have time to go through them. We have a bad habit of sticking to story for too long, and our marketing team always gets upset at us that we go too granular. But we're gonna do our best here. What do you say, guys? Does it sound good to you?
Sounds good. All right. There's always loads to talk about.
Yes, let's give it a try. So, guys, why don't we start on the FanDuel US domination here? So, Jake, obviously, managing director of iGaming Next, you put together this story, I believe, here the other day. And can you talk a little bit about the background to this story?
Yeah, for sure. So, for some time, people have been saying that FanDuel is kind of becoming the runaway leader in the US sports betting market. And it feels like only, half a year ago we were talking about the top 3, but it's very much becoming a top 1 now, with a chasing pack. And using data from Eilers and Krejcik Gaming, famous research firm in this industry, obviously. Like you said, Pierre, in the month of April, FanDuel generated 53% of overall gross gaming revenue in the whole of the North America, in the whole of the US's online sports betting market. Which is crazy when you think about it. That's more than 54 other online sports betting brands that are currently active in the US. Although it should be said that a lot of those are niche small players, and that a lot of that remaining percentage will have been generated by the likes of BetMGM, DraftKings, Barstool Sportsbook. Those kind of top 5 players, but still incredible achievement. And we've spoken before about how a lot of other US operators seem to be kind of flustered by various internal headwinds or issues, but FanDuel's just head down, focus on getting the job done, and that's materialized into them kind of having a runaway lead of market share and dominance in the most exciting gambling market there is right now.
Absolutely, yeah. I mean, talk about. This has always been the story and the expectation in the US iGaming and sports betting markets, that this market are for the big boys only, and it's becoming increasingly clear, right, Jake, that this seems to be the case. And I remember, talking to Kindred at the end of 2020, and their ambitions to kind of reach high single-digit market capitalization in the states where they are live. It's now turning out to be more and more difficult for kind of the tier 2 operators to establish meaningful market share in the market. Like, for me, it's interesting also, like, how come that the American and the European markets are evolving so differently from each other, where on the European side there's a host of operators, hundreds and hundreds of operators who have been able to establish kind of meaningful GGR, and kind of launching new brands is generally rewarded. But that's why you see the multi-brand strategy of companies like Betsson, for example, who is a consortium of 30 plus different brands. And on the American side, it seems that the Americans much more value kind of brands that they trust and they recognize much more than the Europeans do. And I think as well that if we rewind the tape back to say the 2000s in Europe, there was a similar sentiment in Europe as well, where the major brands that had trust, they tend to leverage that trust in order to grow. But at some point in the beginning of the 2010s and onwards, this sentiment changed, where I don't know if it is because the consumer started trusting kind of conducting business and moving money on the internet more than in the 2000s, where the feeling was very much that there was a lot more like foul play taking place on the internet in general. I wonder if it's the same thing that will transpire in the US market, where consumers at the start are seeking themselves to trustable brands, but as time goes on, they are more willing and open to find themselves to like niche brands that speaks to their own personality, let's say, which is what the Europeans have done well. I don't know if there's any thoughts from you guys on that side, or just in general, why it is that the Americans are seeking themselves to this, like why the brands are so top heavy, why the market share is so top heavy.
Yes, it's a good question. I think a lot of it probably comes down to cost of doing business. Like if you're a local operator in a European country, you only need a kind of MGA license or to get going, and then the costs associated with launching in the US and competing with companies that are already there are significantly higher. But just to go back to something you said at the beginning of that, Pierre, where you said it's become evident that it's a market that's separating the big players from the small players, and that is true. But I think it's also, the big guys are struggling as well. This isn't a question of FanDuel simply has more marketing dollars to spend. They've all had a ridiculous amount to spend on marketing, as we've spoken about many times before. This is a case of, having a superior product and an operational efficiency that others with the same deep pockets as you don't have, and that's why that gap is kind of growing bigger and bigger as we see it.
Yeah, we have an interesting comment here as well that solidifies this. It's like a relationship. It starts nice and it's comfortable, but as time goes by, you want something new. People want to explore. It happens in many markets. I like that analogy with the relationships. What would you comment to that, Nico? Can you relate to this comment?
Unfortunately, I can't relate to that comment with respect to what we're talking about. But in the end, Hollywood loves a comeback. Hollywood loves a comeback, and as soon as people actually, cashed out their 3,000 sign-up bonus with Caesars in New York, they are just going back to the best product. And as far as I'm concerned, FanDuel has one of the greatest product out there in the market, and this just shows that it's also about the product you can actually, offer to your customers. And if we would now just have another look at the graphics you just provided, these roughly 55% in April. If you just take a look at February, they had roughly, if I'm not mistaken, 75% of the overall GGR. So
no, it's 25%,
Yeah,
Nico. It's the
sorry.
It's the orange
They
graph
increased.
you need to look at.
It's the orange graph. So they just gained on a monthly basis. So it's just how they actually outperform the overall. And if you just compare it to May 21. And considering that since May 21, even more markets in the US actually opened up, that's pretty much, or possibly the underlying why it's going down in January and February with, people in New York signing up for Caesars, but then going back to the best product. And that's why FanDuel is gaining more and more GGR overall share as well.
Yeah, it's interesting. Yeah, go ahead, Jake.
No, I was just going to say, you can see from this graph that April is an outlier there. It is the first month where they've had more than half of overall GGR, and we don't know how this trend is going to continue either. But it was certainly, so we can't say this is the situation and it's here to stay. But it was certainly a noteworthy development, I think, and one worth covering.
Yeah, exactly. And Chris Grove, who is a part of Eilish and Kirkus, who have conducted this research, this graph that we are looking at right now, he's mentioning here in a private chat the other day that the month of April is very much an outlier for FanDuel. And I'm gonna see if I can get his exact quote while we are here. But he talks about. Let's see here. He says that there was a discussion like, are FanDuel just increasing their marketing spend in order to buy GGR here? Is that what's going on? But Chris Grove is quite stern in saying that no, FanDuel is not outspending the rivals on the marketing front. Which could be a potential explanation of why they are dominating so aggressively. That is not the case. It seems to be the fact that FanDuel just offers a superior product here, essentially. And Jake, you mentioned in your article as well that a potential other explanation as well is general incompetence from the competitors. Can you expand on that, perhaps?
Yeah, I mean, I'm reluctant to name names, but
yes,
it doesn't. You can probably put two and two together, and I think what we've seen, the kind of rate that these companies are quite happy to burn through cash, and a lot of them have then ended up having to pull back on that because either it's unsustainable or they're not seeing, the return on that investment that they're expecting. Whereas FanDuel hasn't overextended itself, and it's now in a position where it's able to kind of lean into that marketing and keep doing it when others are having to kind of, close the purse strings off. But yeah, I think if we see this trend continue, Pierre, like you said, some of the smaller operators, as Isla's put out in that note as well, we're likely to see more smaller operators kind of shut up shop and leave the market because it's just not going to be worthwhile doing business for them. I think, who was it? We've seen Resorts World already kind of dial back and say they're leaving the market. And obviously Penn National Gaming pulled the score out of the US. So they're kind of giving up on their dual brand strategy in the US and are going to just go for the score business in Canada instead, where it has more of a brand cut through and they won't have to spend as much on marketing for that reason. So yeah, I mean, it could be, like you said, the big get bigger and the smaller just need to find some other way of making their way in the US.
Yeah, exactly. And I think that this will tie in a little bit to the discussion later here, that we are entering a bear market and valuations are coming down, more difficult to raise capital and so on, which will make it much more difficult for these smaller brands to operate in the US market. But just to solidify the point here of FanDuel's dominance, if we look at the graph that you created here, Jake, looking at the New York online sports betting GGR for April, like look at the dominance of FanDuel in this graph. I think you mentioned something, Jake, that 61% of GGR in April is belongs to FanDuel essentially, and DraftKings is far behind here, a third, whereas Caesars, who entered the market as the leader when the state of New York opened, have obviously dropped a significant amount of market share here to FanDuel, who keeps growing on a week-to-week basis. But this just really solidifies the fact that like how the biggest players in the market just absolutely dominates the rest of the field. If you look at Resorts World amount of GGR, I mean, it is insignificant on the chart. You can hardly see the little yellow bar here on the chart. Same goes for Win, same goes for PointBet, same goes for Rush Street. Yeah. Interesting graph for sure. And like I said, when we go through, when we follow the kind of bear territory now then that we are entering, it will be interesting to see how the operators are going to navigate this situation.
It shows how difficult it is to play catch up as well, because I think on that graph you just showed, only Rush Street Interactive was the only company to go live on day one, along with those top three operators that you see there. So BetMGM, PointsBet all launched, a matter of days or weeks afterwards, and they've just not been able to make an impact.
Right, the same. And DraftKings obviously launched a couple of weeks after launch as well here, so it took some time for them to
I think DraftKings was live on day one, but we've seen DraftKings have months of delays in Ontario, for example, and it's that idea of how valuable is being first to market.
Yes.
And we're going to see that play out presumably in Ontario once they start releasing similar figures. Yes.
Yeah, fair enough. Yes, that will be interesting to see. We haven't seen Ontario reporting numbers yet.
Not yet, no.
Right?
Paul Burns said at our New York event that they were still taking their time to get that right. But the intention is to do it eventually. It's not going to be behind closed doors. Yeah. So yeah, we await those eagerly.
That's going to be very interesting to see, because again, that is the fight between the kind of legacy gray market European brands versus kind of the American cash-rich marketing spending brands. And
I think there's been some data made available already by analyst firm Morgan Stanley, but it's more based on kind of app downloads and UX rather than it is revenue. So yeah,
fair enough. So kind of segueing in from this topic now then to next topic, which is that we are now entering officially bear territory on the stock markets. And I was planning this topic a little bit before the live stream today, and I was thinking, why don't we start with talking about what is bear territory? What is the definition of bear territory? And like always, we have prepared a wonderful little graph here, so those who are watching can see this here. But essentially, the definition of a bear market is when a market have fallen 20% from a recent high. And this is what has happened on the stock market now recently. And if we look here then for the next graph, we can look at the S&P 500 index, which has now dropped 23.5% since the high back on the 2nd of January. And we can see particularly in the last week has been totally a bloody mess on the stock markets, and that have now driven the markets into officially bear territory. And just to kind of continue the sentiment here a little bit, if we look at historical bear markets and bear markets, we can see that generally bear markets lasts much shorter and it's less impactful than a bull market. Overall, since the beginning of the 1900, this graph is start 1957. So you can see from 1957 to 2018, this graph shows. We can see that generally the stock markets are generally increasing through time. So per definition, that would mean that the bear markets have a shorter lifespan and the bull markets have a longer lifespan. And we can see here in the graph that an average length of a bear market is 11.7 months, whereas the average length of a bull market is more like 55 months, so it's 5 times longer. And the average gain in a bull market is 153%, whereas the average loss in a bear market is 34%. And as we can see here, so the average loss in a bear market 34%, and the S&P 500 so far is down 23.5%. So we are still not as low as the average in the bull markets. All these graphs basically tells us that we can't predict anything because no one has any idea what's going to happen tomorrow on the stock markets, let alone in the next month, of course. But the sentiment is very much, of course, that interest rates are increasing, inflation is increasing, and the sentiment is not very positive. Nico, do you want to kind of fill in here as well? What's happening on the markets? Why are they going down the drain at the moment?
So first of all, I just want to give an explanation why they specifically use the term of a bull and a bear.
Yes.
Because especially if you just, pass by the New York Stock Exchange or the Frankfurt Stock Exchange, you always see these big two statues of a bull and a bear, and it's pretty simple. So a bear, one of the things a bear actually does is slapping someone, so it's going from up to down, and that's why it's okay. A bear market is always falling down, while a bull is going down up with his horns. And that's why it's a bull market predicting like things going up. That's the pretty simple explanation of a bull and a bear market.
You sounded like David Attenborough for a second there, Nico.
the German
David version, yeah.
Yeah, sometimes I just can't hide the fact that I'm a German. Yeah, so we create nice desks, right, with a working kind of how-to, and that's why you're sitting at the desk as well. Probably will save your life. And just going back to the topic as well, interest rates are increasing while inflation is in the end we wouldn't consider inflation going up. It's as of now at a crazy mark with at least 7.8, 8 point whatever percent. So costs of living are increasing as well. And I'm pretty sure we already touched down on that topic as well in the past, that as soon as interest rates are going to a regular space once again. As of now, if you're buying real estate in Germany, interest rate is around 3%, which just doubled for the last 12 months, and we did not yet see the stop. So usually interest rate on buying real estate is at a rate of 4.5% on a 10-year loan, and this is the overall affecting stock markets. If we just consider the spendings on investment companies, there has been a quote by Werner Becher, representing the operations for sport radar at the EMEA and the LATAM, and he just quoted, like, in November 2021, more than 70 billion US dollars had been invested into startups, while in May 2022, less than 40 billion US dollars had been spent on startups as well. So it will be quite difficult for startups going from a Series A to a Series B, etc. So I'm pretty sure we did not yet see the bottom line of this one as well, and it will be interesting which technologies we will see from today within the next 12 months actually surviving this kind of race or not.
Absolutely, and looking at it from an iGaming perspective, Jake, there was a story at iGaming Next this week, the fact that DraftKings are kind of hitting close to all-time lows. I'm gonna see if I have the graph here somewhere. DKNG. Yes, we can see here that DraftKings has fallen now 85% since its high of last year, with a market capitalization of 4.6 billion USD. It's becoming difficult for DraftKings to now raise more capital, so on and so forth. And Jake, there was a story that came in next to kind of highlight the fact that DraftKings yesterday closed at 12.3% down at the stock market. It's a bloody mess for these type of investments that DraftKings are, which are more speculative, whereas the investors are now looking to kind of protect their investments more, so to say. But can you talk a little bit more about that story and your opinion on how this affects our industry?
Yeah, of course. So, I mean, you're right, in so much as we opened the week to a sea of red, certainly on NASDAQ listed gambling stocks. I think DraftKings was down 16% on the 14th of June after a full day of trading. It's kind of, it coincided with a drop down of stock markets globally, including the S&P, which was down by 3.9%. And I think it picked up ever so slightly for a day or two midweek. And then, like you say, we're logging in today and DraftKings is down by another 12.4%. Penn National Gaming down by 11%, Rush Street down by 10%. And I think you hinted on it there, Pierre, is that investors can't take the risk right now in this macroeconomic environment of kind of growth stocks in emerging markets. They need a sure bet if there is one. Certainly a more defensive play. They can't afford to be speculative right now, as we've seen a similar dip, coincide with crypto. NFT sales as well have kind of fallen through the floor. So, yeah, people want a surefire thing right now. And I think, another story we wrote this week that could also have ramifications, relating to the economic environment is a business called Tally Technology, which is kind of a free-to-play startup, so a marketing tool used by operators. And they got a $4 million Series Seed funding round led by Aki's Investment, and we've already talked about Chris Grove. He's a managing partner there. But yeah, I wondered if you had any thoughts about how this environment might affect, startup businesses in this space, kind of trying to secure funding to launch their businesses, keep their businesses going. We might see that begin to dry up slightly, as well as investors,
Yeah, I've been lucky enough to have had the opportunity to speak to some of the institutional investors that are focusing on the iGaming industry specifically, and specifically on the US side of the fence, because in the last 1 or 2 years, there's been a great uptick and a very vibrant startup market in the United States online sports betting and iGaming markets. It's been like the industry has exploded, and on the European side, we don't generally see that many kind of startups that are trying to revolutionize the industry or trying new things, let's say. But whereas on the American side of the pond, we've seen a lot of startups. Sorry. It has happened to me in a podcast yesterday. Sorry. Jake, continue.
Yeah, sure.
Give me 1 minute.
Yeah, I mean, I guess it's an interesting question, and we've seen, we have seen investments come from operators. Obviously, we talked about Huddle on the podcast last week, who netted kind of 15 million from Las Vegas Sands, but it's more about investors, sort of venture capital businesses. Are they going to be willing to take a risk in this space? And like you said, when the market first appeared, all of a sudden in the US, there was a lot of gaps that needed filling. You needed these kind of small B2B startups that did something that your big company wasn't able to do. A lot of those deals have been done already. So now it's a much harder environment to try and launch in, to get funding in. Yeah, exactly.
Thanks for saving me there, Jake. I don't know. I swallowed the water in the wrong tube for a moment. It happened to me in a podcast yesterday as well. Funnily enough, we had to take
There's
a break.
No guarantees with live broadcasts, are there, Pierre?
You never know. You never know here. No, that's for sure. That's for sure. But we were saying that on the European side, we haven't seen that many kind of startups that are trying to break ground and try new things. Whereas on the American side, that has very much been the case. And the American startups have, come up with some really kind of innovative and forward-thinking ideas. There's just to give one example, Wager is a good example here. They raised a lot of capital on the back of the idea that they wanted to create like an Instagram for sports betting, where you kind of merge sports betting with social media, something that is very left field, let's say, and a very very different from what we are used to on the European side, where you kind of see incremental increases and incremental change in the industry from time to time. Now, the big question is, all these startups that are trying new things, as we all know, these ideas are not tested to the markets. That's why they are new. They are trying to break ground, and maybe once in a while you have an idea like this that sticks, and that can potentially, pave the way for the future of the industry. Now, it's becoming increasingly difficult for these innovative startups to raise capital, and the question is, as we're moving in now to bear territory, these startups are going to have a much tougher time to raise future rounds. And so as a startup, especially in this space, in the American space, you need a long runway in order to reach profitability with several rounds of investment along the way. And even if you have a great idea and you are heading the right direction, perhaps it's not enough to raise the capital that you need in order to see this idea to fruition. So that would be my kind of worrying moment: is are these large amount of startups going to make it? And especially now as well, when the operators are tightening their budgets as well, with obviously, as we can see here, DraftKings dropping 85% of the stock markets. They are not going to be that creative at the moment. They will be focusing on cost efficiency and reaching profitability as we go through this market. And so all these small startups that are trying to essentially fight for a very small pool of operators are going to find it more difficult to get the chance as well from the operators to try something new. let's say, while they operate in this market. So those would be some of the comments for me. And we can see we have a comment here from Robert as well, who's saying that recommended listening related to this subject on the All In podcast. The last few episodes of this podcast describe the last few months in terms of recession, bear market funding, etc. really well. So yeah, that's something we can definitely look out for. The All In podcast, I suppose it's on the standard channels. Definitely we'll look into that. But also kind of to solidify a little bit, just wanted to kind of go through a couple of kind of share prices here to again solidify the market that we are in. And I'm just going to do this kind of like one for one here. So we can see here, first of all, this is the ETF bets. So this is a collection of iGaming stocks, essentially, that will kind of measure the industry, let's say. So we can say that basically the iGaming industry have fallen 55% since the highs of September of last year. If we move over to the next one here, we already saw the S&P 500. S&P 500 23.5% down since its high. We look at here at if we're gonna go through a various amount of stocks, we cannot leave out the meme stock, GameStop, of course, here, which is down nearly 60% since its high. Surprisingly, it has still held its incredibly high market capitalization, despite the fact that it's not a revenue generative company, and despite the fact that it's largely held by these retail meme investors, basically. Still holding up, GameStop. Who knows? Maybe it will go to the moon one day. We go on here. MGM Resorts, down 45%. And you can see here in the last week, it's been a brutal affair for MGM, down significantly. They're down 9% yesterday, as Jake mentioned here earlier. We go to Evolution, down 45%. Since its high back in April of 2021, after an exponential increase for many years. We'll go on here to Tesla. We can compare to other industries as well. Tesla down 48% since November of last year. And looking at Bitcoin, of course, it's been a brutal week for the crypto side of the fence. As Jake points out here, last week, I think Bitcoin is down something like 20 something-ish percent. But the worst story is on the NFT side of the fence, where some of the major collection have lost something like 80 to 90% of its value. So these collections that you've heard about, CryptoPunks, the Bored Ape Yacht Club, Cyber Kongs, and all these collections have fallen in value with against the dollar with something like 80 to 90%. We look at Apple as well. Apple, which is seen as a fairly safe investment, still down 27%, more than the S&P 500. And then, of course, like we mentioned here earlier, DraftKings down 85% in total. So not a pretty view here on the stock markets, but our good friend Todd Haushalter, he taught us that human beings, people, we have a tendency to predict the future based on the immediate past. And what this means is that, take Bitcoin, for example. If we rewind the tape back like 7-8 months, and Bitcoin was at like around $50,000 and it was rising, everyone was talking about, when is Bitcoin going to reach 100K? Or can Bitcoin reach €1 million or $1 million rather? Now, as Bitcoin is falling, it's been falling 70% in the last couple of months. Everyone is talking about, will Bitcoin fall below €10,000, $10,000? Because we see trends. We are human beings. That's how we operate. We see a trend, and the trend is downwards, and then we get the feeling that this trend will go down forever. And same when the trend is upwards, we have a feeling that it's going to continue forever. And the goal of a good investor, or in life in general, I believe, is being able to go against the stream. So when everyone is talking about that a stock will continue to fall or continue to rise, when do you go against the stream and say that we have reached the top or the bottom? That is a skill that an investor needs to have. And that is also why it's a very interesting fact on the stock market, guys. The fact that a monkey that picks random stocks, okay, this is actually true, okay? A monkey that picks random stocks on the stock market will perform better than the average retail investor. And you ask yourself, why is that? Well, because human beings are emotional. We are emotional creatures. So we see the stock go down, we panic, and then we sell because we feel it's going to go down forever. And then more professional investors realize what's going to take place. They take advantage of the situation, and they make their picks more fact and science-based, let's say. And so there's the fact of the matter is that a retail investor underperforms the stock market by about 3% every year. Or it underperformed the monkey, essentially, 3% every year. So yeah, there you go. That's the fact of the matter for us human beings when we look at these graphs and we and we feel that Nostradamus is upon us. But can we go against
Wall
this
Street needs to hire more chimpanzees, basically, is what you're saying.
That's it. Yeah, that's it. Or maybe they need to put the monkey outside of the Wall Street next to the
in
bull
between
and bear
the bull
as well.
and bear.
Yes, maybe that's it. And then we have a comment here, like the MFTs, the NFTs were bound to go to nothing anyway. And I would argue that this buys into this very sentiment that because it's gone down in the last couple of months, it's so easy to predict the past. Yes, it's so easy to predict the past, but will they rise again? That's the question. Can anyone make the argument right now that the NFTs will rise again, or just putting aside the trend that we've seen here in the last couple of months? That's what I will be looking at. So we'll go back to this recording. We can't see the name of the person who made this comment here, but we will surely go back to this comment in a couple of months' time again and see if this holds true or not. Maybe it's right. Maybe, we don't know. Maybe.
If it is, we won't tell anyone.
Exactly. All right. So yeah, I don't know if there's any Nico, perhaps any other points here to close this topic up on the bear market situation.
Yeah. So first of all, and as you already lined out with the graphics, where you clearly showed based on empirical and underlying facts that bearish markets is around 11 months in total, over the last time span of roughly 100 years. And the bull market has been like 55 months. So it's outperforming the bearish market by more than 5 times. But as soon as something goes down, we consider this one as the end is near. While something is going up, we don't see this as, oh, we're so super excited. And touching down on the monkey versus the expert thing, it has been experiment, if I'm not mistaken, by the New York Times when they did in January, specifically, let some monkeys throw darts at some stocks or some newspaper, and they outperformed the analysts quite often. So it's not like some kind of someone came up with an idea like, okay, we should like compete monkeys against professional analysts. They actually did it, and that's the.
I'm more impressed that they taught the monkeys to throw darts. That's pretty remarkable. If you can teach a monkey to throw darts, then you can teach him to invest as well. I believe.
You can teach him quite sophisticated stuff, right? You can teach him quite
writing
sophisticated
Shakespeare plays, all sorts.
Exactly. Yes. After X amount of time, the Shakespeare will be written by the monkey. That's true. Yes. That's a law of infinity, by the way. I like it. So let's leave this monkey business behind us, and we have another 15 minutes to kind of discuss the last couple of topics here. Topic which is close to my heart, of course, as a resident of this wonderful, beautiful sand rock that I'm living in, which is called Malta, is the fact that the FATF, the Financial Action Task Force, has put Malta on the naughty list a year ago here on the gray list, essentially, which means that Malta has been not been fulfilling its obligation to fight economic and financial crime. Essentially, when this happened in Malta last year, this was pretty significant news here on the Rock, and there was an election here earlier last year as well, which earlier a couple of months ago, and the opposition really nailed down this point that the government has led the economy into or the country into this grey list. But positive news came out or are coming out today, actually, because the news have not yet been made official. But the very strong rumors are that Malta has now been taken off the FATF grey list. This what this means essentially is more of a reputational thing for Malta more than anything else. It means that Malta is now seen as a trustable jurisdiction from anti-money laundering perspective, so to say, that Malta is equipped to fight money laundering and kind of terrorist financed transactions and things like this. The expectation now, when Malta was grey listed, was that we were not going to see any repercussions in the short term from companies who are domiciled in Malta, but the longer Malta was grey listed, we would potentially see more organizations leaving Malta, leaving the jurisdictions. But more importantly, it was more difficult for Malta to attract foreign direct investment, because of its reputation, essentially. So the longer the grey listing goes on, the worse it is for Malta. So it was an absolutely highest priority from the government to get Malta out of the grey list. And the FATF basically created a to-do list for Malta with a number of bullet points that they needed to, where they needed to update their procedures in order to fight money laundering and terrorist-funded transactions. Earlier in the year, the FATF, they did an inspection in Malta where they basically not only FATF had already approved and the kind of updated the regulatory framework and updated procedures and so on, but now it was up to Malta to actually show action. Not just, it's one thing to have a legal framework in place and have resources, but it's another one to actually being able to caught and to catch the financial criminals, essentially. And this is very much what we have been reporting on now in the last couple of weeks, is the fact that there's an ongoing money laundering case against an ex-employee of the MGA, Jason Frugia and Iosif Galea, who have conducted money laundering and fraud through the MGA. And if you are kind of a low-level or mid-level money launderer in Malta right now, it's not the best time to conduct money laundering in Malta right now, because the Maltese authorities are doing everything they can to show action to the FATF in order to show that Malta can catch these financial criminals, essentially. And they were rewarded here. Most likely today, the news will come out. Malta will be taken off the naughty list. We are now on Santa's good and a happy list again, which bode well here as we come closer to Christmas in 6 months' time. But Jake, I know that our new journalist, Sonia, reported on this as well. I don't know if you have any other kind of nuances or comments to this story.
Yeah, for sure. I think the main takeaway for me from this story was that the Financial Action Task Force obviously haven't been to see the new Jurassic World film, because I think if it would be pretty difficult to get whitelisted if they saw the underground dinosaur trading market that was based in Valletta. But no, you're right. So yeah, Sonia, our new journalist. Welcome to the team, Sonia. Hope everybody said hello to her by now. But no, she did an awesome job writing up her first story on this topic, and she told me this morning that it's likely to be confirmed by the FATF at a press conference in Berlin, scheduled for this afternoon. And I think your summary was bang on, Pierre. It's good timing for Malta, because I think during a time when, certainly in the UK, when Brexit was kind of all that people could talk about, there was a lot of discussion about that being a positive for Malta, because you might see some major gambling companies kind of leave Gibraltar and other UK sort of territories to set up their kind of tax HQs in Malta. And Bet365, moved there and built an office there and did a kind of rationalization process in Gibraltar, and it was all looking really positive. And then, as you said, this grey listing was a big kind of negative, and would, like, whilst it might not have an immediate obvious impact for operators, it would certainly act as a deterrent. I think you're right, for anybody new to come into the market. So yeah, the test for them now will be whether they can keep these processes at a level where they can remain off the list under obviously some quite intense scrutiny.
Yeah, absolutely. And then to solidify your point, Sonia mentioned something really funny yesterday about the Jurassic World movie. I mean, first of all, the irony on the fact that Malta is chosen as the hub for black market dinosaur trading in the movie. That's just, it's hilarious. I live here. I love this country. You know what I mean? But it's pretty funny. But secondly, Sonia mentioned as well the fact that the Malta Film Institute, or rather through the government, they incentivize movies to showcase Malta as Malta by giving financial incentives. So sometimes you see in movies, it's filmed in one location, but they report that they are in a different location. Let's say that they film in Malta, but in the movie it's played out as it's in Beirut, so to say. But the Malta Film Institute, they incentivize movies to basically show Malta as Malta, and by giving financial incentives. And so Jurassic World says, "All right, we'll do that." But obviously, it backfired a little bit here on the perception of Malta, let's say. And if you look at the Jurassic World trailer, you can see like full on Valletta, like the actual like Republic Square and the palace and everything is very clear vision. But yeah, I suppose that's that's another story.
I think it would be great for tourism. I'd like to go and see a dinosaur market.
Yeah, me too.
It doesn't have to be a negative, Pierre. You just got to, market it in the right way.
Yes, it's true. I agree. And we're gonna go see the movie tomorrow, by the way. So I guess we shouldn't spoil it too much here. Even for
my first of all, thanks for the spoiler. All good.
Yeah, sorry about that, Nico.
Brilliant.
We should have said spoiler alert.
Yes, true. And Rick, yes, go ahead, Nico.
Yeah, so touching down on that topic once again, due to Brexit, and as Jake already mentioned, we've seen some of the tier 1 and tier 2 operators relocating from Gibraltar back to Malta, or to Malta, like Bet365 or William Hill, which are now operating also from Malta, or used to operate from Malta. And as soon as the grey listing actually has happened, we didn't see a lot of kind of bad impact. I'm pretty sure we would have seen bad impact if one of the big operators would have just closed down their entities in Malta, like the Bet365, the William Hills, the Leo Vegas, or whoever. So if one of them would have gone out of Malta, then the impact would have been significantly more. As of now, it has always been quite a challenge to open up a bank account in Malta. MGA did quite a good job. As soon as it was way too difficult to just open up a bank account, and that literally forced banks being licensed in Malta to actually open or offer banking solutions to the iGaming industry as well. So as said, we didn't see a lot of negative impact. So as of now, I'm pretty sure we won't see a lot of positive impact as well, as the negative didn't happen. But for sure, it's a good thing that Malta is still within the EU. You can still operate your EU-wide business from Malta, which is a good thing. So applying for a license in the UK or in Germany or anywhere else in the European Union is still possible if you have your headquarters in Malta.
Absolutely, absolutely, and Nico, and we can see how you mentioned Bet365, which is currently building a massive office in Malta at the moment. Going to be ready, I believe, quite soon, a couple of months or something along those lines. So we see these international operators are still moving towards Malta, which is a positive sign. Leaving that aside, we have 3 more minutes, and we have gone through 30% of our stories. And so I think we can kind of summarize the last couple of stories here, Nico. I know that this is a speciality of yours. So if I can ask you, we talked earlier in the podcast here, the story that you found, which is the fact that Unibet has left Germany. It would be really interesting to hear an update on that front. So do you want to start there, perhaps?
Yeah, so first of all, Unibet has never been licensed in Germany. So they always operated on a non-licensed way. As of now, they stopped offering their services or new registrations by the 9th of June. They will close down their offerings by end of July. No, sorry, end of June. So no more sports betting for any customers. And you can still cash out until the first quarter of 2023. But as said, they will not offer sports betting in Germany, which they never did in a licensed way. As of now, they are also sued in Germany as well from some of the player protection agencies. They are one of the sponsors of Borussia Mönchengladbach. Which kind of rose a little bit of an attention why one of the pretty much old-fashioned clubs in Germany is operating with a non-licensed entity, and they just decided on, okay, we will not go for a German license due to the licensing regime. Markets you could operate in as a licensed entity are pretty much not that attractive. For sure, and that's why they are pretty much closing down. And this news just started rumoring 1 week ago. There had been no official statement from Unibet. It's just on the affiliate websites.
It's funny you should say that, Nico, because this was your scoop and this was the first that I'd heard of this story. But Kindred have just sent me an official statement with some quite nice color on it about why they've decided to withdraw their sportsbook and slots license applications. I'll just read a line out from it because it's quite interesting in terms of what you're saying. It says, our long-term strategic direction sets out locally regulated market as the core engine for our growth. However, license application procedures, conditions, and the regulatory environment need to be transparent, sustainable, and financially viable for a market to be competitive. And then it goes on to talk about Germany specifically, and it says, the current application procedures, as well as the terms and restrictions in specific product offerings, mean that the overall conditions are not sustainable and competitive against the unlicensed offering, so the black market they're talking about. Therefore, we do not see a foundation for long-term shareholder value and or customer experience at the moment.
Oh, that's very interesting. Very interesting. Yeah. This is what we've talked about as well. Is it sustainable to operate in Germany with the 5.1% tax on turnover? And it seems that Kindred is now taking the stance that it's not, which is probably, is it one of the first? This is the first major operator that is taking this stance?
Yep, it's one of the, it's probably the biggest one, right? One of the tier 1, tier 2 ones. But I wouldn't consider this one being based on the tax rate of 5% on turnover. It's just the offerings, right? Because as a black market operations, you can offer anything and everything, especially during within the live sports, because as a licensed entity, you're only able to actually offer bet types which are linked to the overall result. It's not like what happens within minute 5 to 10, 10 to 15,
there's no
whatever.
bet builders.
Yeah, and the fact is, as of now, they are not, going for the non-licensed operators, and that's pretty much the main story. And this is always what also the Deutsche Sportwettenverband is suing the entities. So all licensed entities in Germany, there are roughly 25, 26, they sued the Hessen government as they are not following all the non-licensed operations as well. And that's why all the licensed entities are claiming like, okay, why are we going for a license if each and everybody not holding a license, first of all, is not paying the taxes. Second, they have way better markets to offer. And third, they are not literally handing out their revenue streams as well. And these three arguments literally led to all the license operators suing the German state.
Very interesting. And also just a little bit of an insight here is the fact that operators who operated in Germany in an unregulated environment have gotten legal letters personally. Some of the CEOs of these operators have gotten personal legal letters, essentially telling them that if you don't close down operations in Germany, we will pursue legal action against the CEOs personally. That is a good way to put pressure on an organization, because you don't want to go against the German legal system when the hammer comes down. That's not the side of the fence you want to be on, of course.
Yeah, especially if the tax authorities are, trying to look out or watch out for you. I'm not talking about the regulator themselves, but as soon as your case is on a desk of anyone being involved at a tax authority, then the fun starts, and you don't want to be part of that game.
That's absolutely true. Guys, we are running over time here as usual. We didn't have time to go through everything today here, but nonetheless, some shameless self-promotion. If you want to read into more of the stories of this week, you can go to iGamingX.com and you'll find all the stories there. Jake, Nico, it's been an absolute blast to do this together. So awesome to have you guys here. And what do you say? Shall we go down to the beach together, all three of us, and have a pina colada, perhaps?
Sounds good to me. I'll see you there.
Yeah,
Awesome.
I'm in.
Awesome. Thank you so much, guys, for listening in. Thank you to Playzone and Simpler for helping us keeping these streams going every single week. From next week, we're going to move on to Thursdays at 3 p.m. CET, I believe, so that we can also get with us the American audience on the Thursdays. And now a lot of people are taking vacations on Fridays, so on and so forth. We're going to move to Thursdays, 3 p.m. That's our new home. Thank you so much, guys. Thanks, everyone, for tuning in, and we'll see you next week.
Okay, have a lovely weekend. Bye.